What is the participation rate on an indexed annuity? Hi there, my name is Stan the Annuity Man, America's annuity agent, licensed in all 50 states, top agent in the country. Written a book on indexed annuities that I would love to point you to. You can download it for free, but we're going to get into really just a little bit more about indexed annuities and just the participation rate after this. So if you're watching this video, someone's probably trying to sell you an index annuity, and everybody you've ever run into in the financial business, for whatever reason, they're now trying to sell you an index annuity. Why is everyone trying to sell you an index annuity? All I can tell you is the Annuity Man, the top independent agent in the country, it's not because it's the best product on the planet. Not a bad product. It was put on the planet in 1995 to compete with CD returns, not market returns. It is not a market product. It is not a security. It does not require securities license to sell. It requires a state life insurance license to sell. So right there, you need to kind of understand this product is not for market returns. Okay, so when we're talking about participation rate, index annuities have few levers that limit the growth or limit the upside. Participation rate, there's a cap, there's a spread. I've done videos on this. I'm going to encourage you to go and take a look at those. Also at my site at theannuityman.com, I've written an index annuity owner's manual that you can download for free. And it is a treasure trove of facts and the facts that you're not going to hear. Now in 1995, when index annuities were put on the planet to compete with CDs, really since that time, that's what they've done. Historical returns since 1995, one of the biggest bull markets of all time. At the time of this taping, look at the date. They just have not performed as they are pitched to perform. Now, there's some people out there that tell the truth about index annuities, but most of the calls that we get are something to this effect. Hey, Stan, this guy said I could get a 20 or 25% upfront bonus. He said I could get market returns with principal protection. And then they'll add something like, and free long-term care, whatever. But let's talk about the market returns with principal protection. The principal protection part's absolutely true. It's a principal protection product. But the market returns part really is not true at all, historically, just based on facts. Okay, now we sell index annuities only when someone needs income for later and that an income rider has to be attached. So we're only focused on the income rider as a contractual guarantee. We're not looking at the caps and the spreads and the participation rates. Now, caps and spreads and participation rates, just understand that those are limiting levers to the growth that's being promised. And with most index annuities, and I'm trying to keep it out of the weeds here, most index annuities, the companies can change those rules on how those caps and spreads and participation rates, those percentages are when you renew. And typically it's annually. There are some index annuities that are longer than that, 2 years, 3 years, 4 years, but most of them are 1 year in length. So from point to point, you get to lock in the game, all right? But just understand, here's something agents typically never tell. If the S&P 500 is the index of choice within your index annuity, that does not include dividends. And you say, well, wait a minute, Stan, why is that important? Because over 50% of the returns of the S&P 500 are dividend-based. So if you're not including the dividends and you can only lock it in 1 day per year, the other 364 you can't do anything, your level of expectation of returns has to be in line with reality. Now, I know what you've been sold. You've been shown, hey, Mr. Jones, if you'd have owned it 10 years ago, look what you'd have made. Hey, Mr. Jones, here's our back-tested numbers. Here's the unicorns chasing the butterflies. All I can say is just don't fall for that. The first rate that you get with an index annuity might be good. Years 2, 3, and 4, 5 might not. But never buy it for market growth. Buy it for principal protection or buy it for an income rider that's going to provide lifetime income. And if you're going to buy that, the reason you're buying the index annuities for income in the future, then shop all income riders for the highest contractual guarantee. That's a commodity product. So once again, I hate to kind of poo-poo this whole index annuity thing, but the way it's being sold out there is horrific. It's been horrific for a decade. And some people just sell index annuities. It'd be like some agents that's all they sell. It would be like a doctor, they only prescribe one medication. There's many types of annuities. Okay? Index annuities are not a one-size-fits-all product. It's not a market product. It's a principal protection CD product. That's what it is. And that's what it was designed for. That's not how it's sold. So if anyone's talking markets, stock market, growth of a stock market, potential growth of stock market with index annuities, and then they throw in a participation rate or a cap or a spread, and It's garbage. I hate to say that. If you bought it for CD returns, great, super. If you bought it for principal protection, great, super. Don't ever buy it for a bonus. Bonus is candy for the stupid. There's not an annuity CEO that wakes up in the morning and says, you know what, I want to give money away today. It doesn't happen. There's 100 pennies in the dollar. And typically that upfront bonus that sounds so juicy goes to the income account, which is a phantom account anyway. You can't cash it in, can't pull out any interest, you can't transfer it. It is only and solely there to calculate your first income payment, and that's okay, but just because it's a high upfront bonus doesn't mean that it's going to be the highest contractual payment. In fact, what we found over the decades is that the bonuses don't equate into the highest payment. So when you go to our site and you do income rider quotes, we're factoring in all the ones with bonuses, all the ones without bonuses. It doesn't matter to us, it's just part of the contractual guarantee. And then all you should care about is the number. What is that contractual number, whether it's on your life or you and your spouse's life, etc. So once again, if you really want to get in the weeds and learn what a cap and a spread and a participation rate is, download my book at my site, theannuityman.com. That's a free download, 70, 80 pages, and I get in it. I explain it. If you want to geek out and figure it out, that's fine. If you're at my YouTube channel, if you go to my YouTube channel and go to the video section, we've segmented the videos I've done on index annuities and caps and spreads and participation rates, and we've done examples and all that stuff. The problem is this, that with most indexed annuities, the carriers can change those participation rates, spreads, and caps at their discretion. So in essence, you might like the participation rate year 1, but you signed a 10-year contract. So the question is, what's going to happen year 2 through 10? Only the carrier knows. So in essence, you're buying a 1-year guarantee on an index annuity with a 10-year surrender charge. Think about it. If you have to buy from your brother-in-law that's selling the index annuity, then ask them, do you not sell anything else? Or is this just the best product ever? And if they say it's the best product ever, they're lying. It's a good product. It's a CD product. It's a principal protection product. It's not a market growth product. As long as you remember that from this video, then I've done my job. If you come away with this going, I don't believe him, I think I can get market upside, then go for it. Knock yourself out, and then call me 2 years later and then apologize because I told you so. Okay? Everybody that's bought an index annuity from us bought it because there's an income rider attached. We never even talk about the accumulation side. Okay? Do me a favor, go to my site, download that book on index annuities, take a look at that, schedule a call with us, we'll talk about it. If you want to talk to me, send me an email, stan@theannuityman.com. One last thing, above my head is a video that I'd like for you to click, and it explains the process of how our paperwork process works if you want to become a client, and how that works from start to finish, whether it's IRA, non-IRA, Roth IRA, doesn't matter. I'm going to explain that to you. So hit that, and we'll see you next time.